And it doesn't matter, what your business is, what your cost structure is, how robust your supply chain is. I think the baby has been thrown out with the bathwater, in my opinion. And I don't really think there are too many companies like Clever Leaves that have the cost structure that we have, that have accomplished the things that we have accomplished. Now, no doubt, there is a heavy weight on these two shoulders, which is, okay, it's time to deliver financial performance.
Kyle Detwiler joins me now. He's the CEO of Clever Leaves Holdings, trades on NASDAQ under the symbol CLVR. Kyle, welcome back.
Thanks, great to be here.
Yeah, Kyle, it's been, I think we last had you in December of last year. And so what has happened with Clever Leaves since then?
Sure. Well, we've been a public company now for coming up on our 1-year anniversary, which is a great milestone for the company. But we're continuing to grow the B2B international trade of cannabis. It's not easy. We've announced some big triumphs. Our first shipments from Portugal. We've had some evolution in the Colombian legal framework around the export of flower products on top of extract products. And then just a couple of days ago, we actually had what I think is a very transformative shipment, which is our first THC Flower sales to the United States, which I don't think many people thought, was even possible.
Yeah, that is super intriguing. So give us a little more color on that. Who did you sell it to, and through, was it through a national agency, or how did that happen? It's so counterintuitive to think that the U.S. would be importing cannabis from anywhere.
Yeah, I agree. Honestly, when the team brought the idea to me, I thought they were nuts. I immediately loved the idea, but I thought it was crazy. And so, we began working on this, you could almost say several years ago. We began analyzing the different regulatory pathways by which we could send product in. Now, just because cannabis is prohibited by the Controlled Substances Act in the United States doesn't mean it's, there are no possible ways to manage it. It just has to be managed in according with a Schedule I narcotic protocol. So in this case, we sold the product to a company called Biopharmaceutical Research Company, which has licenses from the U.S. Drug Enforcement Agency, or the DEA. And so they're, qualified or licensed, if you will, to hold that product. So we sold them 30 kilograms of flower in this process. And it almost needs to trace back, back in July, we announced something we called Project Change Lives. Project Change Lives was a program where we're going to give $25 million worth of product to third parties, academic institutions, or researchers to conduct research on cannabis in the United States. And that was kind of phase 1 of this program. Phase 2 is now the commercial shipment. We have other phases that we hope we will be able to announce someday, but this is very difficult, right? Nobody's really done this before, and so we have to take it one step at a time. Sure.
So I'm curious as to, in terms of the pricing that you realized from that transaction. My first thought is, oh, well, you must have given them a real discount for them to choose you as opposed to a domestic source. But what are the circumstances of the sale itself? Did you have to discount the product?
Sure. So we haven't publicly disclosed, our pricing. We've publicly disclosed the size of the program. So, 30 kilograms, and in some senses, that's a truck full. But at the same time, it's not like an ocean freighter full. So I think, as the Chinese proverb goes, every journey of 1,000 miles begins with a single step. And so this is our first step, but we haven't gotten into pricing. Now, in terms of your second part of the question, what was their alternative? Today, there's only one source for federally legal produced cannabis in the United States, which is the University of Mississippi. So that product is, has limits to it. So
the University of Mississippi produces famously, consistently awful cannabis.
I'm not here to qualify or speak about their quality, but I'm here to speak about ours. And we thought it was to now have 2 suppliers in the United States. I mean, hey, it's double your options. And if we can provide more strains, more product variants, higher potencies, we believe that's the type of product that American researchers should be working with, because it's what American consumers are acquiring at dispensaries, and so it would only make sense to match those two up.
Sure. Okay, so I mean, being a producer in Colombia, you're already one of the lowest cost producers in the world. So I guess that in and of itself provides a competitive advantage if you're going to compete internationally for markets.
100%. And, it's interesting that this product actually came from Portugal, which is, our second production center. So I think it's a one thing to have low cost, and Portugal is definitely a low cost site. It may not be as low cost as Colombia, but what we've learned is, having the cost is one part of the equation, but having that regulatory expertise is another part. We're not the first cannabis company. There's a lot of large established medically focused cannabis companies in Canada that could have done this, but this was it took a lot of work. It took a partnership. It took a lot of business development energies. It took that charitable initiative that we launched back in July to lead up to that. So I think it's cost is one, quality is another component, but also just having the regulatory know-how to accomplish this is a big competitive advantage as well.
Sure. The sector, in terms of the publicly traded cannabis companies, the whole sector has suffered quite a horrible year so far, and Clever Leaves really hasn't been able to escape that downdraft. But increasingly, more and more money managers and analysts are starting to think, well, we're getting into the point where it's just a screaming buy. In fact, I had Chuck Turk from 9 Point Asset Management on the show recently, and he said in those exact words, some of these stocks are a screaming buy. So in terms of Clever Leaves, let's talk about financial performance. What have your financials looked like over the last year?
Sure. So, we're still in our, growth phase as a business. A significant amount of capital has been invested in the company, but, since we are a public company, I can't comment on performance in between quarters, but, I encourage people to look back at our 10Qs from the June 30 quarter ended. But, really that's just the beginning. And, I agree with you. It feels like, if all the cannabis kids at school were in one classroom, we all got sent to the corner, and it doesn't matter, what your business is, what your cost structure is, how robust your supply chain is. I think the baby has been thrown out with the bathwater, in my opinion. And I don't really think there are too many companies like Clever Leaves that have the cost structure that we have, that have accomplished the things that we have accomplished. Now, no doubt, there is a heavy weight on these two shoulders, which is, okay, it's time to deliver financial performance. Our sales cycles are very long. It takes a bit of time to move into new markets. We're pushing into countries like Germany, Brazil, Australia, Israel. Those 4 markets are not as, the path isn't as worn as it might be for an American recreational cannabis company to sell or a Canadian cannabis company to sell, but it will also be harder for others to join us in that journey. So while the challenge is high, climbing a big mountain is not for the weak at heart. It will also make it more difficult for others to replicate what we do when we accomplish that.
Right. In terms of accessing the U.S. recreational market, is that on your list of ambitions?
I think we'll always evaluate opportunities as, regulatory reform occurs in the United States. But at this time, there isn't a plan because, we are a NASDAQ listed company. And so, while there are ways to, align with, U.S. recreational businesses, we don't have one in mind just now.
Sure. So then where are you focused in building, where do you see your strongest pipeline of product sales happening?
Yeah, definitely those 4 geographies that I mentioned earlier. So Germany, Brazil, Australia, Australia and Israel. Those are the big 4. We are trying to open up the United States in sort of a nifty way, but very early on there. And so I think we need more time to see if that's going to be an opportunity. But I don't believe many people are putting any weight to what a federally legal medical market in the United States could look like. And we're starting to maybe have people ask those questions.
Sure. In terms of being one of the lowest cost producers on the planet, what is it about Colombia that gives you that ability?
Well, there's a couple things. One, the environment is born for producing cannabis. If you went to a Southern California cannabis company today, that was located in a greenhouse, you might find out that 20 or 30 years ago, they used to grow, products like red roses or chrysanthemums there. And if you follow the flow of the roses, most of those are now produced in Colombia. So Colombia actually is responsible for about 7 in 10 cut flower imports to the United States. So we have 12 hours of sunlight, 12 hours of darkness. For those that have grown cannabis before, you know that that is a natural circadian rhythm, if you will, to the plant that we get for free. You know, we don't have to have supplemental lighting. We don't have to have, you know, large facilities to protect from variations in temperature that are extreme. We don't have to deal with snow. So those are just a number of the advantages. And of course, you know, labor costs are a bit lower in Colombia compared to, you know, the United States or Canada, and that helps as well. But most of it comes from the fact that cannabis just grows a bit more naturally in this environment. I like to think that, you know, if Martians were looking down on Earth, you know, you probably wouldn't see cannabis growing naturally in some geographies, but in Colombia, it would be a natural fit.
Right. Interesting. Okay, Kyle, well, that's a great update. We're going to leave it there for now and come back to you soon. I really appreciate your time today.
Thanks, James.
You bet. We'll talk again soon. Let's talk a bit about Clever Leaves' share structure. We'll look at the chart here. As you can see, it has been suffering the slings and arrows that the cannabis industry has generally been suffering. This is, let's see, the first time we talked to Kyle was back in here, just after they went public through a merger with a SPAC, making them one of the best capitalized and one of the best capital structures in the industry. So obviously, if you got involved with the company here in later February, which is the last time the whole industry saw a real major uptick in interest in terms of buyers outnumbering sellers in the stocks, you know, you would have paid a lot more and lost a lot of money to this point investing in the company. However, they do have one of the best share structures, 30 million shares outstanding. And so I think we want to keep our eye on the sector. You know, this arguably could be seen as a bit of a reversal trend down here, in that we've seen a bottom and it looks like there could be some support developing here. However, it could also go the other way. It could continue its downward descent. But I think that Clever Leaves is probably one of the best bets in terms of share price performance potential, based on the fact that they've only got 30 million shares out. They got 50 plus million in cash. And so I think it's probably an A+ structure. All the money was raised at premiums. There are no cheap penny shares in this mix. And so I give it an A+.